Hello everybody, the markets are looking pretty damn bloody red right now, and so in this video I want to talk about some news around DiDi possibly getting delisted and what this may have to do with it, as well as other reasons that I think are responsible for the moves in the stock markets, and then also tell you my personal opinion around the things and what I personally will do. But first of all, happy Thanksgiving. I hope you had a nice day with your family and also enjoying the holidays if you got some. But unfortunately, it seems like the holidays will be disrupted by bad news in the market. So currently NIO is down almost 5%. Also Tesla is down 2%. Lucid is down even more, minus 6%. Lots of those growth names are down, particularly Chinese names, but also the US growth stocks like Coinbase, Virgin Galactic, BNGO are also down significantly, as well as the meme stocks here, AMC, GME, Palantir is down significantly. And even some of the bigger names, the FANG stocks like Apple and Facebook, are seeing big drawdowns today pre-market. So we're having some voices and opinions out there that are attributing this move to the DiDi slump pre-market as China set to request delisting news, which has come out earlier today. And basically the news is that regulators have asked the company's top management to remove the firm from the New York stock exchanges over security fears. But frankly, I am not so sure about this news and how it affects the markets. First of all, the report seems to be a little bit fabricated and cooking up old stories here. One thing is the news agency cited people familiar with the matter who asked not to be identified due to the sensitivity of the matter. So we don't have actual sources from China coming out there, like official names, like who's the regulator, who's the name of the regulator going out there saying. So I haven't seen these reports, only this Bloomberg report here. So that seems to be a little bit fishy. I cannot believe that yet. Although we do know that this threat already existed since the summer back then, when DiDi basically ignored the warnings of the regulators and went ahead and IPO. And the problem with DiDi is, of course, that they, for once, not even were listening to the regulators, and on the other hand, have some possibly sensitive data of maybe even some famous or important persons in China about their movements and such. And so, well, there is an existing threat that yes, DiDi maybe actually have to go and delist at some point in time. But on the other hand, what would this mean? Possibly they would go to Hong Kong and trade there, or trade on the over the counter, or may even thinking of going private, and then they would possibly actually bail things out at around $12 per share. So that's actually higher than the current share price. And so this is why I think DiDi is an isolated case, has no spread to other Chinese equities, or even the US equities that we see are down significantly on this perceived news. And additionally, if we look at what is really happening with some official sources, is that China regulators seeks to avoid US delistings of Chinese firms. So with this news that just came out November 25th, we have actually a name, Shenbing, the Director General of the China Securities Regulatory Commission, so basically the Chinese SEC. And what he's saying is, quote, "We don't think that delisting of Chinese firms from the US market is a good thing either for the companies, for global investors, or Chinese-US relations. Furthermore," he says, "we are working very hard to resolve the auditing issues with US counterparts. The communication is currently smooth and open. There is risk of delisting of these companies, but we are working very hard to prevent it from happening." So this is an official Chinese source going out there saying this. This is somebody who's being quoted by this article. And so this is actually what I always say, that I think the US and China will work together and try and find a compromise. That doesn't mean that they will achieve this compromise, but at least there's a will, and even from the Chinese side, to do so. And so I would be much more confident in this article in contrast to this Bloomberg news. Now, what could be really behind the stock moves? And well, if you look at some of the investment front pages here, we can see that it is mostly around this new COVID variant, which is causing fear around what will happen to the economies. We have issues here in Europe with new measures and lockdowns, and this may possibly also spread to the US later on. Plus, additionally, there is talk that the Fed may actually reduce their asset purchases, so start the tapering process more easily. We don't really know yet when Europe, the central bank here, will also follow suit that. And this is what many have said was fueling this huge bull market in the last couple of months after the COVID crash, actually. And so this would actually also possibly depress share prices. And I think those two issues, like the COVID fear and the fear or the uncertainty, or let's say actually the expectation that the Fed is tuning down those asset purchases, may actually depress the share prices right now. This is also supported by the fact that also crypto, or namely Bitcoin, is seeing a huge drawdown here. I hope it can actually really bounce at these levels, because actually I'm still in the views that Bitcoin in particular could see a run into the end of the year and going up further here, but it seems also be affected by those news. Certainly has nothing to do with China or DiDi here. So what is it that I'm personally going to do? And this is not financial advice, but I'm most likely not panic selling my Chinese equities there because frankly they are mostly undervalued. Some of them I'm also down significantly, so I'm not selling at a loss here unless it makes sense. Although maybe it makes sense with regarding some tax implications there, but what I would rather do is raise some cash right now and sell some of my US equities that have been running up quite well, because I think actually the US is priced to perfection. And if there is a bigger issue with this whole liquidity and tapering problem, then I'm expecting that this will take down the whole markets and particularly also the US, I would say. And so I would try to lock in those profits right now. I'm actually frankly also thinking about selling then some of my Bitcoin, because I can now also sell them without any capital gains taxes on it. So that's my personal situation there. But as I mentioned before, I'm still expecting hopefully a crypto run until the end of the year. But these are some assets which I would possibly take off some chips, raising cash in order to, being less emotional around a possible decline in the stock markets, and then also being able to buy some dips wherever I see the opportunity for it. And as always, you know my views. I think it's time to think anti-cyclical. For example, BlackRock says it's time to buy Chinese stocks while they're beating down, trimming India exposure. And also what could happen if COVID cases are rising further and we see more measures. And the global economy is suffering, not only in China where we have new cases, but certainly in Europe and maybe even in the US. This may actually depress some of those economic indicators, and that would actually once again lead to stimulus and maybe the Fed even increasing their asset purchases again. So this would also have the counter effect again, that maybe some of this news that people are worried about right now would actually cause the opposite to happen, namely that there will be more liquidity and more asset purchases again. And that also, we saw that one in the last COVID drawdowns, would also benefit growth stocks again. We've seen in the past that NIO was particularly doing well during that time. And so while we need to be very cautious about these short-term fears right now, we also need to consider that this will only be half a day of trading, lower volume due to the holidays. And so smaller players can have a higher impact and kind of, messing with the prices there and manipulating them. And so we should rather see, I think, a bigger tendency, what really is going to happen by the start of next week and going into next week, where there will be higher volume again, and then we will see how these fears pan out. But once again, I don't think they are necessarily tied to Chinese equities, certainly not to the DiDi case, whereas I think the isolated DiDi case, of course, has this threat of delisting. And then again, on the tapering side and the economy, we need to see if the economy is deteriorating of all of this, whether or not the governments and central banks will step in again and also help with that, and this way also help the equities. So I hope you found this informative, and now you know how I'm personally thinking about it. Let me know down in the comments what you think about the situation. Anyways, thank you guys for watching. Still enjoy your holidays and the weekend, and see you in the next one.